our 22 News Broadcast Center, this is 22 News in Focus.
Good Sunday afternoon. Welcome to 22 News in Focus. I'm Kate Walsh. With the holidays behind us, we're now looking forward to the new year, and many of us are making resolutions, whether those be the typical weight loss and fitness goals or getting financially on track or ahead. So today on 22 News in Focus, we'll be helping you with the latter. We'll speak to experts who can help you organize your money so that it works for you. And we'll be speaking with a personal life coach to help you stay motivated with those goals, whatever they may be. Part of being financially secure is filing your taxes properly. So joining me now to help you start organizing for all that is Paul Mancinoni, owner of Paul Mancinoni Company, an accounting firm in Springfield. So thank you so much for being here today.
Kate, thank you for having me. Thank you.
All right, so first, the few days left we have this year to make some last-minute tax breaks. That's what we want to talk about. So what advice do you give your clients this time of year, right before the new year begins?
Well, you know, it's interesting that you bring that up with the holidays, Christmas just passing. There's only a few days left. However, what people need to know is you can use your charge card for deductions, medical expenses, charitable contributions, employee business expenses, laptops, etc. The IRS views credit card purchases as deductible when they are purchased, even though you are not paying them until the next year. A lot of people forget about that, and they're all tapped out after Christmas like we all are, but that is still an opportunity, and we urge people to do that.
Interesting.
Yep.
Something I definitely wouldn't have thought
Absolutely.
of. What other advice do you give to your clients?
Well, it's never too early to start preparing, because when you start talking to preparers and people like me, Kate, we're always dead smack in the middle of tax season at that point. So start accumulating your charitable contributions. Make sure you have a letter that says thank you for your gift from the charity. Very important. The IRS does not have to accept just a canceled check. In fact, the law says that they should have a letter. So now is a good time to call the charities and get items like that. And again, if you have the opportunity to pay something this year as opposed to waiting till next year, do so.
Okay.
If it's going to get you a deduction, absolutely.
All right, so, you know, the fear among a lot of people is, oh my goodness, I'm going to get audited by the IRS. How often does that really happen, do you find? And what kind of red flags should people avoid putting up to the IRS?
Kate, my compliments on a great question, because that's what we do. We do all audit representation work throughout New England. They never tell us. Every time there's a case, they do a Freedom of Information Act request, and they never tell us. It's always a big black page. But let me tell you what we do know. A tax return starts to get pink, on its way to red, if you will, red flag, when certain things start to happen. So if income's relatively low, but charitable contributions are very high, that would appear to be odd. The state of Massachusetts is tied in with the Registry of Motor Vehicles. So if you are low income but just bought a new Porsche, you're going to be audited. That is that type of trigger. So there are little things that accumulate that set off bells, if you will, that can get a return selected for examination. Also, the more you make, the greater chance of being examined.
So what kind of things should people keep in mind to not put those red flags up? I mean, what if you just have a bunch of cash at home and you buy a Porsche, you know, it's not on the record?
Kate, grand slam. That's a great question. That's true. But you're going to get audited in order to explain that. That's the problem. You can do that with your savings. But if your income doesn't jive with your spending, you may be presented with that question. And you simply show it at that point. Keep in mind, the audit's already in play. Yeah.
And that can happen for years past as well as the year that just finished as well, right? So
My compliments, Kate. Can we switch? Let me tell you, there's a 3-year statute of limitations. There are exceptions to that. If you don't report all your income, there's a few ways that the IRS can go back. If there's fraud, they can go back indefinitely. I'm working on a big case now in the eastern part of the state. But basically, 3 years after you file a return, that is the window by which the IRS can select that return for examination and make changes.
So you should keep all of your information for 3 years at least?
Oh, no, you should keep your information for about 7. Okay. But the statute of limitations is 3, and if you have to change your return during that period, called an amended return, it does not add to the 3-year statute of limitations. just
Okay.
FYI.
All right, interesting. So now we often hear about the option of deferring income or postponing income to possibly fall into a lower tax bracket or what have you. Could you kind of explain what that is and when you should do it, when you shouldn't?
Well, it's easier said than done, because if somebody's a W-2 employee for their employer, it's pretty hard to say, can you hold on to my next 5 paychecks until next year? But in the business world, we're cash basis taxpayers. We report income when we get it. And that gives us the opportunity to maybe defer billing until the following year. Or if we were going to sell something, a piece of land, in November, we may say, let's delay that closing until next year. And that absolutely would get you not only defer income to the later year, but you won't even have to deal with it conceivably until April, a year and a half down the road, if we're using my November analysis. So that's prudent when you know what your future income is going to look like. You need to balance the 2 years to make sure, otherwise you're putting too much in the following year, and that can put you in a terrible tax rate, especially in light of, Kate, we don't know what's going to happen in the election, and that could change rates.
And that's perfectly legal to just postpone it? And
Absolutely.
Okay. What are some valid deductions that can be taken to reduce your tax bill?
Well, the one that we don't want to see, but there is a deduction for it, is medical. I mean, it's not worth having. But charitable contributions are always a good mechanism for people who are charitably inclined. There are a number of ways you can reduce your taxes very prudently by being civic. And also real estate taxes if you own a home. It gets a little complicated here, Kate, so forgive me, if you're not in what they call the alternative minimum tax, pay your real estate bill now before the end of the year instead of waiting, and you'll get the deduction this year. So there's always, tricks that we've learned over the years that would help.
Is there a certain minimum when it comes to maybe charitable donations or other things like that you need to make in order for it to really make a difference?
Well, you have to be itemizing your deduction. So typically, Kate, somebody who owns a home, is paying real estate taxes, and has a job is past the threshold where they can itemize. And that opens up the opportunities for charitable contributions.
So for people renting, what could they do maybe to save on their bill?
It's a lot harder.
Yeah.
Really, home ownership and getting into the itemized deductions is the best place to be for reducing your taxes. The only other avenue for somebody who's a renter, and this is kind of odd, but if they own rental property and have a loss on those rental properties, conceivably they may be able to use some of that loss. But not many people rent and own a home that they're renting to others.
Yeah.
So that's,
Kind of rare.
Yeah, it's pretty rare. I've never seen it. Yeah.
All right. Well, in playing the stock market, there's a term called tax loss harvesting.
Yep.
When can people take advantage of that option?
Well, at the end of the year, that's what a lot of people are doing, and they're calling people like Mark at Raymond James. If you had gains, if you sold gains, stock at gains throughout the year, you might want to take advantage of some losses toward the end of the year to offset those gains, and vice versa. If you sold a stock that had a loss, well, you can only use $3,000 of that loss every year. So as you approach the end of the year, now's the time to talk to Mark and say, what do we have that we can sell that'll be a gain to offset that loss? Because losses by themselves are not very valuable for taxes.
How about with retirement accounts? Is this a good time to add to your retirement account? Or
if you are not participating in your employer's plan, if your employer doesn't have a plan, frankly, it's a great thing to do. IRA contribution are the best to get the deduction. I'm all for it, and as Social Security, Kate, is starting to suffer, and within 20 years, people are not going to be getting what they were promised, despite what they say on television. It's more important than ever for people to start thinking about themselves and their own retirement.
Last question. When it comes to filing taxes this year, I mean, it's always the same day, it seems, but this year there's it's pushed back a few days, right?
Oh, this is huge.
Talk about that.
Thank you. It's April 18th is the due date this year, and that's because of Emancipation Day in Washington, D.C. But because of Patriots Day in Massachusetts, residents for mass returns have until April 19th. So our deadlines are 18th and 19th. And when you think of a tax professional, Kate, 4 extra days is ginormous. And we are grateful for these years when they happen.
Does tax season open later as well?
No, it's one day earlier than last year. The IRS released yesterday that they were going to accept returns on January 19th, but here's a good opportunity to forewarn anybody. That's when the identity thieves file their returns. They need to file them right away or they're going to get caught. And I think anybody who files, honest people, who file very early are going to be waiting for their refund, because I think anything that happens on January 19th or the 20th or that first week is going to be held up for scrutiny, because the service is waiting for them. Most employees aren't even getting their W-2s yet by January 19th. So that should be interesting to see how that plays out. Wait to get all your documentation and file. If you've been subject to identity theft, I can assure your viewers it already happened by the time they file. Let's just hope the IRS has some better clamps on it this year, and I think they do.
Yeah, we'll be talking more about that after the break. It's not too early to start planning to reduce your tax bill in 2016 either, so we'll continue our conversation with Paul Mancinoni after a short break. You're watching 22 News in Focus. Welcome back to 22 News in Focus. Today we're talking about financial planning and following through on your goals for 2016. We're continuing our conversation now with Paul Mancinoni, owner of the accounting firm Paul Mancinoni Company. So we were just talking about protecting yourself when it comes to filing your taxes and the thieves out there stealing your identity. So could you give some pointers as to what people should do? It's
a huge problem, Kate. It's in the tens of billions of dollars every year. It's amazing. We saw it for the first time at my own office this past year, and we do everything we can. The people have to ask questions. They have to ask their practitioners, how do you protect my information? When they use a company to buy something, rent a center, I'm just making things up, and they have to fill out an application, and that application contains personal information, they have to ask the question, how are you storing it? Is it in those files back there with no lock on them? People need to be more vigilant about their own information, and they have to start asking questions, because they may not like some of the answers that they get, because this information is getting out there somewhere, and the consequences are dire. And it really, if somebody was expecting a refund, Kate, and they were subject to tax return identity theft, they're years away from getting that refund. And that's real money that's very important to a lot of people. So the most important thing you can do is do your homework with your tax preparer, but not only that, with your own personal lives and how you track data. Absolutely.
A lot of people are moving from paper copies of things to online copies of things to try to avoid that, not having papers hanging around people can grab. Do you have to have paper versions of things, say, for charities to prove that you donated to them, or other places that you need to prove you should get tax deducted? I think you're okay scanning your documentation. We have scanned records for clients that we later produced for examinations, and they've been just fine. The only thing I would say is when you're scanning and saving on a computer, I think I'm more afraid of hackers than I am with home break-ins. So and keep in mind that this electronic filing caused the tax return identity theft problem. In the old days, a return was filed, you'd get your check. If you're married, you and your wife would endorse the check and go to the bank. There was no fraud. So when we talk about e-commerce and e-filing, that's the mechanism by which the fraud started. But we're mandated to do it now. And, I've written letters about maybe we should think about, instead of doing direct deposit refunds, send people checks. But they want their refund so fast that they're going to continue to do this by electronic deposit. Have you heard from the IRS about any changes they might make for this tax season to try to prevent some of the fraud that happened last year? No, they're not saying what they're doing, but I know they're doing some items. If anybody was subject to theft before and they properly reported it, I do not think they will be subject to theft again, because the IRS is putting a special code on that person's return, and they're looking for certain items. That we know, because we've done that for people. But other than that, they're working very underground, and rightfully so, to try to catch people in the act. And one thing we've learned is if you reveal what you're doing, the thieves will get ahead of you, because they're doing stuff now that you have to do what I do to know how to do that. It's compelling. Yeah. So are there any other changes to laws, tax laws for this coming year?
Congress likes to wait until Christmas time to do their changes, and this year was no different. Just before Christmas, they extended some tax breaks. The biggest one is really for businesses, Kate. They're allowed to buy machinery, furniture, and equipment and not have to depreciate it. They can expense it right away. That was $500,000, which was great for all of our local medium, large-sized businesses. But that $500,000 threshold was about to come down to $25,000, making it a lot harder. They brought it back to $500,000, and it's going to stay there permanently. They were about to take away a $250 deduction for teachers that are out of pocket for their supplies, and they extended that permanently. So what happened last week or just before Christmas was actually very beneficial, especially to teachers, especially to businesses. There's a college credit that they're going to continue. The child credit continues with some enhancements. So I think Congress did the right thing here, and the president signed it, so we're good to go.
Interesting. And so would teachers have to file that under listed deductions?
Correct.
Would they not be able maybe to get that if they don't reach the threshold for other items in their lives?
Nope, that's a freebie on page 1.
Okay.
It's an adjustment to income, and you don't have to worry about owning a home or doing the things that we talked about that would get you to itemize. This is a page 1, $250 deduction. Yep.
Okay. Anything else you want to add? I know we were
One
talking
thing,
about.
and it's a trick that Mark taught me. So you're one of your next speakers.
Mark Teed, yes.
Mark Teed, as always, is my educator. Giving a gift to charity of appreciated stock is a grand slam home run. And we know this. You know, Mark has clients going back 10 years that might have bought XYZ stock for $1,000, and that stock is now worth $5,000. If you give that stock to the charity, you do not pay gain. That's a $4,000 gain. You don't have to pay, and you get the deduction for the whole $5,000. You're actually saving more than you bought for the stock in the first place. And we are telling everybody to do it. My wife and I do it, and I'll thank Mark publicly for teaching me the tricks.
When it comes to certain medical payment plans, you know, healthcare plans, some people choose to have kind of like a bank that they put money into. Do you recommend that people put money in whenever they can for that when it comes to taking taxes out? Because I know it's tax-free, so.
I think HSAs are very smart, and I think they're very smart because the one way for people to decrease their premiums is to increase their deductible. And because, you know, the risk, especially for younger people, the risk of getting sick is a lot lower. And an HSA is a great way to take money, get a tax deduction for it, and without having to itemize like we discussed prior, and that money is then available to help you with your deductible or copay or what have you, should the need arise for medical. I think they're great, and I think they're valuable tools, and I think that combined with visiting your health insurance, reviewing your health insurance, could actually be an opportunity to save money. I think it's very prudent, yes.
Okay. What should people be doing all year long instead of panic mode when they finally get all their paperwork in the mail and they have to file their taxes? Are there any steps they can do in July, October to make sure that it's just all in one pile?
I have the worst profession because I only have friends between February 1st and April 15th. On the 16th, my phone never rings. What we would love to see is more contact with professionals throughout the year. Talk about what you're doing. It would be nice if I knew somebody sold a home when they sold it, as opposed to in February, oh, by the way, I sold this home. I didn't think I needed to pay tax, so I didn't tell you. Well, you do. And now it hurts. When if you told me at the time, I would have told you to set some money aside, and you wouldn't be scrambling because you spent it all. Communication with your tax preparer is the best thing you can do throughout the year. There's nothing more. I understand the chains, you know, the chain places that do returns. But for people like us who study to do tax planning to help people, there's nothing more frustrating than learning in February that somebody did something. And they're happy to utilize you, but they don't use us for what we're for, and that's advice. That's frustrating, and that's would be my advice.
Okay. And so can you just repeat one last time for people, when is the best time to file your taxes once tax season begins and you get everything in the mail? Should you do it immediately or wait a little bit?
I think you should do it as quickly as you can, because although most tax return identity theft happens, and it's only because of that I'm answering the question in this way. That's how big the problem is, Kate. Not all thieves are going to file on January 19th. So the best defense is the best offense is a strong defense. Try to file early. If you have one or two little partnerships, oil and gas things that you're waiting for, I'd say don't wait for them. File the return, because there are going to be small amounts that you can change later, or let the IRS write you a letter. It is that important. Tax return identity theft is that serious of a problem that don't wait for that $100 1099 to come if it's going to hold up your return. No way. I never would have said that 5 years ago. It's that big of a problem.
Wow. Do you expect it to be even worse this year?
No, I think it's going to be a little better. I think they're turning the corner.
Okay.
They put all their resources in that, and I think we're going to get the fruits of that labor this year, I hope. But it's going to happen for sure.
Let's hope so.
Yep.
And good luck to you tax season.
Thank you.
I know it's very
Very
crazy.
sweet. Thank you. Thank you.
Paul Manzanoni, thank you very much. Up next, how did your investments do this year? The new year can be a time to start fresh, and after the break, we'll talk about what investors should be looking for in 2016. You're watching 22 News in Focus. You're watching 22 News in Focus. Today we're talking about your money and how to follow through on your New Year's resolutions. We've just talked with a tax accountant about end of the year tax breaks and how to plan to reduce your tax bill in 2016. Well, what about your long-term investments in the often volatile stock market? Joining me now is Mark Teed, an investment advisor with Raymond James. So thank you very much for joining us, Mark.
My pleasure, Kate. Thank you.
Of course, a lot of things happened in 2015 on the stock market. Can you give us the highs and lows and what happened this year?
Well, first up front, we've got to say that we were wrong last year. I sat in this same chair a year ago and said, market will probably be up 8 to 10% this year. We felt pretty confident about it because earnings were escalating and everything looked good. But at this point of the year, with a couple days left to go in the year, we're down. So we were wrong. But I think we're going to be right next year.
Optimistic?
Yes.
All right. So how about this past year? What happened? Why are we ending lower maybe than you had predicted?
Well, a couple things happened. I think the biggest is the oil sector. Earnings were down about 50% this year. That just really took all the returns from the S&P and the Dow just down. We didn't anticipate that. Oil prices a couple years ago were $114 a barrel. Right now, they're about $35 a barrel. Nobody really saw that coming. So what we're seeing is a lot of earnings that are related to the oil sector are way down. That's pulling the Dow Jones average way down.
How come the oil prices dropped so much?
You know, we really don't know yet. It feels like maybe the world economy is slowing down. Maybe we think the more positive story is that the frackers in 2008, when they found that new way to horizontally drill, created such supply in the world that supply has outweighed demand, and sooner or later prices have to fall. And some of our more engaging nations that we compete with, like Russia, Nigeria, and elsewhere, continue to pump oil. They need the money to run their economy. So now there's too much oil, too much natural gas in the world, so prices have to fall.
Do you predict that they'll go back up anytime soon?
It feels like it. You know, at $35 a barrel falling 70%, I wouldn't be surprised to see oil prices fall a little bit more and then have a nice big snapback in 2016.
Although we wouldn't want to see the snapback.
Yeah. I'm telling people to help oil prices raise your temperature in your house a couple degrees and drive a lot more.
This past, I guess, 2 weeks ago, maybe 3 weeks ago, the Fed finally raised their interest rate for the first time in a long time. Yep. Can you talk about the significance of that and why now?
We are living through economic history right now. Never before has this happened, and it's been almost 9 years since rates have been this low. And finally, Janet Yellen did what she really didn't want to do, which was raise the rates.
So why did she not want to raise the rates?
Because I don't think the world economy is strong enough, and we are the world leader. I don't think she really felt comfortable doing it. The month before, the vote was 9-1 against raising rates. So the next month it was 10-0 to raise rates. So in 1 month, not that much has changed. But I think politically she had to do it. I think she had talked about raising rates so much, but it sends a signal to the world that the American economy is strong and getting stronger. We came out with GDP numbers this past week that were up 2%, better than expected. So I think what Janet Yellen is telling us by raising rates is that the economic story in America is good, and it's going to get better in the next couple of years as we project higher GDP numbers in 16, 17, 18, and even 2019.
Will she raise the rate again in January?
Probably not. I think it's one and done for now. Wait for the data, see how it's doing. But at some point she's going to make the case, maybe March, that she's got to raise rates again.
And why would that be?
Because once you start raising rates, you need to really keep the progression going, because we know that normalized rates in our world is probably 4% on the Fed funds rate. And right now she raised it from 0 to 0.25%. So she has many steps left to go. We think 13 or 14, and to do that, it's going to take 3 or 4 years.
Yeah, of a lot of changes.
A lot of changes. But if she does it well, if she communicates well to the public and to the markets, it will be a very smooth transition. This last week has not been that smooth, however.
Yeah, so what kind of changes have the average American noticed from that small interest rate hike?
At this point, really none. Mortgage rates have stayed down. Credit card rates have really not jumped up. Some of the prime rates have moved up a touch. But most of the consumer rates that we see have not changed that much.
So moving into the new year, what should people do if they want to finally start investing in the stock market, or invest a little bit more than they do already? Where should they be looking to invest?
Well, it's a little bit like what Paul said in the last segment. If your employer has a 401k plan and you're not taking advantage of the match, shame on you. So call your HR department, Human Resources, and find out what the match is. How can you at least get that? And then I think it's even further than that. I think most people, to get in the stock market, the best way is through their employer plan. You know, take 10% of your income every year. Make a commitment to your retirement income to save 10%.
Would you say retirement, investing in your retirement, is the most important investment?
I think so. I think it's even more important than college funding, because, you know, they say on an airplane when you get on, if your child is in danger, put the oxygen mask on you first and then put it on the child. I think it's more important for your retirement income, because you can always fund college. Your kid could be a great quarterback or whatever. But retirement is there, and give you an example. At age 50, you only have 180 paychecks left until you retire. And if you don't have anything saved by age 50, 180 paychecks is not a lot of time to make up that difference.
Wow, yeah. When you say it that way, it's scary. So who are the biggest winners and losers of 2015?
Well, the biggest winners this year were technology stocks. Healthcare stocks did very well. Consumer discretionary stocks. What happened, we found, was that all the money that people saved in energy, paying for gasoline and oil for their houses and their cars, went into buying new things like an extra channel on cable TV, or a Tiffany bracelet, or a Honda, a Harley Davidson motorcycle. People felt more flush this year, so the energy stocks did very horribly, and the consumer discretionary stocks did well.
So that was the trade-off.
Yep. And if you think of some companies that make iPhones and iPads, those companies are both technology companies and consumer discretionary companies. People, when they have extra money, want to buy those products.
Okay, that makes sense.
Like, I'd like to buy a drone now or something.
Oh, yeah. That's a big gift
It
was a big gift this Christmas.
I know.
What kind of long-term planning products or investment strategies should people be considering?
That's another very good question, Kate. I think people have to look at themselves and say, how much risk can I handle? Every once in a while, it doesn't happen often, every once in a while, I'll put somebody into an investment plan and they'll say, it's just too much risk, I can't sleep at night. So I think you have to define your own risk level. Some people are real gamblers, other people are just so safe they can't take risks. I think that's the first thing you have to do. Find out who you are as an investor, and then think about what kind of product mix you want. Do you want to own individual stocks or mutual funds or some sort of fee-based account? And then move forward. But you have to do so boldly, because, as I said before, time goes by quickly. And if you're not doing it, it's the numbers of people that are not saving have become staggering. So people have to save. So I'm like the evangelist of savings here. You have to go out and you have to really try and proselytize people to stop spending and start saving.
Should people be more risky with their investments when they're younger?
Yes.
Okay.
No
And then
question about it.
when should they start being more conservative?
Probably about 75 years old.
Really?
Well, if you retire at 65 and you live to 95, that money has to last 30 years. So at some point you do want to get a little bit more conservative. But again, it depends on where the interest rates are. Right now, I'd say more into stocks than bonds, because interest rates are at all-time lows. At some point when rates normalize, you want to move more into bonds. But people always have this feeling that when they retire, they immediately have to go into bonds or go into safe CDs. And that's just not true, because the most insidious thing that happens to an investment portfolio is the way inflation eats away at your purchasing power. So you have to counteract that by having some sort of growth investments. So I said it facetiously, 75, but in reality, that's about where you need to go.
People are living longer too.
They are.
All right, Mark Teed, thank you very much for joining us today. Is your household budget balanced? Well, after the break, we'll talk about what you need to do if you've resolved to get your financial house in order for 2016. You're watching 22 News in Focus. Welcome back to 22 News in Focus. Today we're talking all about last-minute tax breaks and looking forward financially to 2016. We've also discussed investing and retirement planning, but for many people who are living paycheck to paycheck, finding money to save is nearly impossible. So joining me now to discuss ideas on how to organize your personal finances is Gordon Oliver, a certified debt management counselor with Cambridge Credit Counseling. Thank you so much for joining us, Gordon.
Thank you so much for having me, Kate.
All right, so credit card debt, mortgages, student loans, car loans, medical utility bills, they all add up to a lot of money for the average person, and they need help trying to figure it all out. So what do you do first in your profession when someone walks in? What's your job?
Basically, when a family or an individual comes with some financial concerns or questions, as a certified counselor in an agency, our job is to try and get them to a better place financially. And the way that we do that is to diagnose any problem areas that they may be having and try to find out how they're handling the money that's coming into the household, where their expenses are at, and looking at a basic budget to start off the conversation to see, after we look into what kind of debt they have and what kind of expenses that they have, where we might be able to make recommendations and come up with potential solutions to deal with those problems.
What are some of the most common problems you see from on a day-to-day basis?
Credit card debt obviously is one of the biggest ones. Typically credit cards, where people run into trouble, and this gets into how you operate a budget, a lot of times credit cards become the overflow of money you do not have. And if there's no plan in place to kind of to deal with that debt and get it down, if the money wasn't there in the first place, if that problem continues to go down the road that it's going down, people get over their head in debt and then have problems and are not sure what to do to deal with it.
So just like how some people, find that losing weight in the new year is just overwhelming, some people might find that to be overwhelming because they just have so much debt. How could they possibly ever pay it? So how do you actually help them manage their money?
The first thing, again, the budget is the most important part. So you have to look at income first. What is coming into the household of the individual as far as income is concerned? And we recommend people look at net income because that's the money that they're actually going to have to work with. And then balancing on that is expenses, rent, mortgage, utilities, living expenses like groceries, haircuts, dining out, things of that nature, and then various other expenses. Some people have child support that gets deducted out of their check. So we have to look at the whole entire balance of the money coming in versus the money coming out, and that's where we start. And more importantly, is there a budget in place? And if not, that's the very first place that we work with a consumer, because that, if anything that a consumer can do is the most important thing, it is making sure that there is an actual balancing of what's coming in and where it's going. That's what a budget does for a household.
If someone does have a lot of credit card debt, do you put them on a kind of payment plan, like take $10 out each week or something like that? So
you can self-administer a plan, and that all comes into what we learn through what's coming in and what's going out. So to your point, if a household budget has maybe, let's say, 2% or 2.5% left to pay credit card debt, that's typically the same amount that credit card companies bill. So that would immediately show that they don't have too much more to pay above and beyond. And if the interest rates are 17, 18, 22, 23, 25%, that's problematic as far as having an opportunity to get that debt down without making some changes.
What are your recommendations when it comes to consolidated loans? A lot of people have taken loans out from different banks and whatnot to pay for college. Now they're consolidating stuff together. Do you recommend that? Is that a good option?
So if you're dealing with student loans, the federal loan programs that are out there, you want to be careful of getting those loans out of the federal realm because they offer programs for people that aren't necessarily making enough income to make payments to them. So by consolidating them, you put them into a private lending situation, which might take away the opportunity for those benefits. On the private side, there are not really many programs. I counsel people that are dealing with hundreds of thousands of dollars in private debt, that if the interest isn't competitive, then searching out an opportunity to get that to a better repayment is something that should be looked at. More importantly, because the higher the debt level gets, you're getting into payments that are almost as big as a mortgage payment to pay back a student loan debt. So yes, it is an opportunity for the private side more than the federal.
Okay. And talking about paying mortgages, sometimes people just can't pay their mortgage anymore. They need to foreclose, or no, not foreclose, but file for bankruptcy. So how do you manage that? What do you recommend to them, and what do you do in that kind of situation?
A lot of our business is based on looking at a person's situation and narrowing down what the opportunities are. If people are healthy financially and we can help them administer a plan on their own, no problem at all. If they need some form of assistance, like working through the credit card debt through some programs that are provided, that's an option. There are plenty of times where you get to a place where it's just very simply looking like, if we've gone through how are you going to bring more income into your household because the formula is not adding up to the amount of debt that you have, and there are no real solutions, it gets narrowed down to, can you do a debt management plan? There are debt settlement plans out there that you could either work with an agency to do or do it on your own. And then, of course, there's always the opportunity to sit with a bankruptcy attorney. Most of them offer complimentary consultations for the first time to assess the whole situation, see if that's a road that they want to go down.
If people did want to come to you for advice and support and whatever else they need when it comes to managing all of their finances, they must have a concern about how they're going to pay for you on top of it all, right? So do you have something in place to help them with that as well?
We do. We're a nonprofit agency.
Okay.
So a lot of times when people come to us, most of the counseling that we do doesn't have a cost attached to it. If they utilize a plan or a service that we provide, like a debt management plan as an example, we're registered or licensed in most of the states, and they have fee bases that are offered as what we can utilize. But if people are having difficulty, we do reduce those down. And in some of our programs, there are even requests for fee waivers that we allot people because they can't afford but still need the help.
Okay, interesting. So let's kind of recap. What are some short-term solutions you give to people after they come to you? And what could you tell people watching at home if they're in a situation where they might need some help?
There is an attachment to the fact that you have to have a relationship with your income and your expenses. You have to have it. You can't just treat it as though it doesn't exist. You have money coming in, you know it goes out. The first thing that you need to do, especially this time of year when everybody's hungover after Christmas and getting ready for the new year, is set goals. First of all, three goals that would be worthy right now would be a 1-month goal, a 6-month goal, an annual goal, and even for some people that have a little bit of a higher goal of maybe they're not home buyers yet and they want to get into a home, maybe that has to be branched out for maybe a year or two depending on what the situation looks like. But the initial goal is, there are things we recommend for people to be healthy financially, and many experts say you should have 3 to 6 months of your bills in savings so that if life gets in the way or there's some fluctuations in what's happening with income or a major expense comes that you weren't planning on, you have something to fall back on, so you're not using various borrowing sources like credit cards to fund those things and then potentially get into debt and cause problems. So an initial immediate goal would be starting to work on getting savings to fall back on to support the budget.
Okay, interesting. Back on credit cards, some people say that you should never let your credit card go to zero, or use your credit card a lot and have some in there to show the bank you know how to pay it off a little bit by a little bit. But there must also be benefits to paying off your credit card bill each month, right? So what do you recommend to people?
So the formula, everybody closes it in on that one piece. The formula for a good FICO score, as an example, if people go to myfico.com, they have a tab which says Learn About Scores, and it gives a breakdown of what actually truly affects your score. So payment history, 35%, that's one of the biggest ones. Within all of that, when you learn about, if you made a reactionary decision, like you thought that you had to improve your credit by closing all your credit cards down, that in fact can hurt your credit score because you're taking your history with those accounts and ending it if you close them, and you're bringing that limit that you had available down to zero, and if there's a balance, you're bringing it actually to the level of debt, to the amount you have outstanding. So research and turning to experts like these panelists you've had today, Paul and Mark, in those fields, don't assume that you know and don't be reactionary. Get some help, get some advice, and figure out what you're trying to achieve by the goals you're setting, and get some experts to help you out with it.
Excellent advice. Thank you so much, Gordon Oliver.
No problem.
Up next, if you're planning on making some New Year's resolutions that perhaps aren't related to finances as we've been talking about, we have ideas on how you can keep those promises to yourself after the break. You're watching 22 News in Focus. Welcome back. You're watching 22 News in Focus. Today we've talked about end of the year tax relief and planning your financial future, but keeping to those plans and any other resolutions you make for yourself in the new year can be difficult. So joining me now to provide some ideas on how to follow through on those resolutions is Dawn Leeks, a life coach and partner of Lioness Magazine. Thank you for being here, Dawn.
Thank you.
First, we'll start with, what is a life coach? What do you do?
Well, a life coach is someone that you hire to walk alongside you really while you're trying to achieve your goals. So I'm there to hold you accountable, to challenge you, and to encourage you as you try to reach the goals and the resolutions that you're setting for yourself.
Yeah, you always need that other person there to kind of keep track of what you're doing, right? Or else it doesn't actually happen,
Right.
I find at least.
Right, and it works better with the coach because that person is paid, they're
Mm-hmm.
trained to do it, as opposed to sometimes you try to get, say, a workout buddy, and they really don't feel like working out that day, so they don't call you. You don't feel like working out, so you don't call them. But your coach, you know, is always going to be there.
So what kind of people are your clients? What kind of resolutions perhaps do they have that they need you to help them with and keep track of?
Well, one of the main things that I do is I help people get clear on what it is that they want. You know, a lot of people that I run into just on a daily basis, they know they want to do something different, they want to do something more, and they're not sure what that is. And so I really help first to get clear. Let's get some clarity. Let's find out what your passions are. Let's find out how we can bring more of those things that you're passionate about into your life, and let's develop a plan to get exactly where you're trying to go. You know, once we figure that out.
So would that be jobs, relationships, all of that?
Oh, all types of things. Some people want to get more organized about, more organized. That actually is a thing. Some people they know they want to do a career transition. They're not really sure what that is. A lot of my clients are entrepreneurs. They just want to get really focused about, you know, is this right? Should I leave my job? And am I ready to leave my job and pursue this business? What things do I need to put in place to kind of make sure that I'm ready to get there?
Okay. So many people set broad goals for the new year that aren't really realistic. They like to think big, but it doesn't actually happen because it might be too big. So what do you recommend to those people in order for them to keep their goals?
Well, I encourage people to give themselves mini wins, right? So if you haven't been working out, like say for the past year, and I know around the new year, people set a lot of goals around weight loss and working out. Maybe to say, I'm going to work out every day for an hour, that might be a bit much because you haven't been working out at all for 365 days. You know, maybe set yourself a mini win. I'm going to work out twice this week, or I'm going to I'll work out 2 times for 30 minutes. And the other piece of that is thinking, give yourself the space to achieve that goal, right? So we know that in 2016, there's still going to be 24 hours in a day, right? We're not getting any more time. So you've been doing something else with that hour up until now. And so you need to figure out, well, what am I going to shift around or what am I going to give up to make space for these goals that I'm setting?
How about if people fail in their mini goals? What should they do? Like, let's say they had the goal of working out twice a week. They worked out once. Not the end of the world, right?
No, it's not the end of the world, and I wouldn't even consider that a failure. What can we learn from that? Okay, so I said I was going to work out twice, and I said I was going to do it at 7 p.m., but I totally forgot about the kids and that somebody was going to be taken to some sort of sports practice or something, and I didn't really manage that time well. Maybe working out in the morning would be better. Let me try next week, I'll go in the morning. So I think giving yourself a break, not being too hard on yourself, but using each opportunity to learn what works best for you and how you can make space to achieve your goal.
How important is research in setting a goal you can actually achieve?
Well, I think research is, I'm glad you said that. I think it's important because let's think about sometimes we want to get organized, right? And so I will admit I'm not necessarily the most organized person, but when I was taking steps to get organized, I actually had to decide to read a book about how to get organized because it's not something that came naturally to me. And then I was able to learn that I wasn't necessarily disorganized. It's just how I was thinking about things and to buy things that kind of went with how I like to do things. So I kind of like to kick off my shoes when I come in the house. Well, I just got a basket to put near the door, and I look super organized because all my shoes are in that basket, you know. But had I not done that research, I wouldn't have known to do that.
Okay. How can a person intentionally direct their lives toward a specific goal if they don't have a goal for the new year? What should they look at in their lives to try to make one? I mean, everyone always wants to be better. So what should they look at? Where should they start if they want to make a resolution or a goal in the middle of next year because they don't have one right now?
Well, I think one of the big things is to just take some time to think about what it is that you want. Not just out of the next month or out of the next 6 months, but what do you want out of your life? Believe it or not, one of the most challenging things that I do with clients is get them to dream about what they want. So people are really bogged down in what they think they can have. So just really sit down and think about, what do I want my life to look like? You know, and that will help you to get some goals, because say if you know you want to retire in the next 5 years and you want to spend your retirement spending some time with your grandkids. So now we know we probably need some goals around health, because you want to be healthy in order to enjoy that retirement time. You need some, so basically knowing the larger things that you want, and just the direction that you want your life to go in will inform how you can make some of those smaller goals.
And kind of going off of that, how do you recommend people prioritize in life when it comes to making goals? Because sometimes you have to give up some things to have room for other things. So
absolutely, and it is a really common problem for people to be able to say no to things. I know at one point I was on like so many boards and committees and things, and in order to prioritize, I kind of backed up and took a look at what are the things that I'm passionate about, and I kind of set a little priority list. So a little litmus test I would give to requests before I would say yes or no. So one was I passionate about it? Did it fit in with my philanthropic goals? 2, did it fit in with my business goals? Like, was it going to help me in my career or my business in some way? And then the third thing is it fun? Because there were a lot of things I was doing that I really hated doing, but I was doing out of some sort of sense of obligation, and it wasn't really serving me.
Yeah, that's important to have fun. You have an event coming up very soon. Can you quickly talk about what that's all about?
Yes, it's Unleash Your Vision for 2016. So right along the lines of what we've been talking about, Lioness Magazine, we're actually having a vision event. And so women can come, and we're going to do vision boards there. I'm going to do some talking about how to be intentional about your goals, how to direct your life as opposed to just letting life happen. And we'll be doing some exercises on how to set goals if you don't have some goals in mind already. And we're going to have Tara Missildine from Beloved Earth there. And so she's a really successful entrepreneur in Western Mass, and she's going to come and talk to us about how she made her vision come true and what steps she took to really be successful.
Excellent. And where will it be, and how can people find it?
It's going to be at Samuel's Tavern, at Samuel's down at the Basketball Hall of Fame. And it's December 29th from 6 to 9, and people can go to lionessmagazine.com for ticket information.
Excellent. Dawn Leeks, thank you so much for being with us today.
Thank
Great
you.
advice, like everyone else. We'll have the last word for you right after the break. Stay with us. You're watching 22 News in Focus. You're watching 22 News in Focus. Today we've been discussing how to maximize your income tax return, as well as where to invest your future and how to manage your finances now. We also talked about setting realistic resolutions and good practices to realize all of those goals. So that's our program for today. We want to thank our guests for joining us, and thanks to you at home for watching. If you missed any of it, you can watch it in full anytime on our website, wwlp.com. From all of us here at 22 News, we wish you a wonderful Sunday, and we'll see you in the new year.